Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at _finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics and subjects, looking for potential investment opportunities, sharing those opportunities with everybody in the community. I am trying my best to get you guys the lowest prices possible for this bull market in commodities that we are in. Some companies are up big. They are ripping. They're out of bases. They're going into stage two moves. So some of those areas may not be as good of entry points as other areas that haven't moved as much yet. So there are areas that are still down that are very attractive, very out of favor that a lot of people on YouTube, frankly, aren't talking about at all. At all. Those are the sectors that look good for entry. If you're interested in signing up, specials the coupon code that you can use. It is a 50% discount, which ends up being $25 for the first month on the monthly membership. Only the first month, though. And you can get a $100 discount, which ends up being $500 a year for a yearly membership on basically how I view the markets. You'll learn a whole bunch. I wish someone like me existed where I could take advantage of a kind of like using me as a mentor to some degree, and what I've learned and looking at these charts maybe from a different perspective than others. So yeah, you can sign up for a yearly. Even if you're a monthly membership, you can always swap over. So come down, the market sniper. We highlighted before this report that our take on the Australian 10-year will trade up in rates to 5.75%. Australia's inflation tops forecasts at 3.2%, highest in over a year. And then he shows gold priced in dollars with a potential head shoulder topping pattern. I don't know if that's the case, guys. I really don't know. I will say this. The head shoulder topping patterns, a lot of the times they show up at the end of a big trend. Now, I don't think gold's at an end of a big trend. So now we've got ourselves in a pickle here, right? We have someone who is, a part of the YouTube community. A lot of people like uh, his charting skills and stuff like that, and they, very highly, um, high opinions on it, right? Well, in the beginning of these bull markets, I like looking at the cycle. So he's looking at this from a very short-term market move, and it very well could be a topping pattern. It very well could be. I'm not saying it can't be. But I just view things from a longer thing. So first he talked about the 10-year yield of Australian. So this is the Australian government 10-year. I like doing my own thing here. Downtrend, broken, and then we've got a little squeeze up going on here. So that's number one. That does look like it could break higher. We came from the bottom up, consolidated, and then we squeeze into a corner, and a lot of the times it breaks higher from where you entered. So yeah, that looks pretty good. And we've got a big long-term trend line that's broken that screams upward. Now, I use the bigger long-term trends as my, like that's what I overweight. I don't overweight the short term. The short term is most of the time market noise. So I think even if this were to break down, I still think we're going to end up going up because of this big long-term trend that's broken to the upside. So when they view the markets, they get all scared of a potential pullback in the short term. The short term, you're not going to win in that game. Like people who trade short term lose money all the time. I don't like playing the short term. So long term, it's up. Whether that breaks immediately or if it takes a little bit of time is immaterial to me. Now, another thing that you can look at is the Australian dollar versus the United States dollar. And this looks like we are about to try to break out to the upside. That's why you get these big selling pressure moves, and then you get less selling pressure, less selling pressure, less selling pressure. So really what's happening is the selling pressure is leaking out of this pattern. And then we're going to get a move higher at some point in the future. I can't tell you exactly when, where the Australian dollar is going to outperform the United States dollar. And that happens on all these commodity bull markets. You can also look at the Brazilian real USD. And that's got the same, it's a very similar pattern for a bottoming pattern, falling wedge into a double bottom. And then this is going to work its way on up. The patterns are there. And we can also look at CAD USD. CAD USD, this is the last bull market there when it ripped. We're going to get this, we're going to get a very similar pattern there, I think, where it's going to rip higher with time. I even think, I don't know if you guys see this. It looks like we've got like this big, oh, that's just a big volume candlestick. I was like, what is that? We just haven't broken out yet. So it's coming. It's coming. And then you can look at I think it's called what is it? The is it JA? Oh gosh, can't remember the ticker on this. JSU maybe? JS? It's the TSX Venture. And I think it starts with like a J. I can't remember what it is. Anyway, that's putting in a big bottoming pattern. It's breaking out. It's all interconnected, guys. It is all interconnected. All these rates, the currencies, they're all interconnected through interest rates and currency exchange rates. So yes, it's all coming. Now, he talked about the potential shoulder head shoulder in the gold price. So are we going to get a topping pattern here? I don't know, guys. I mean, we've got a big bullish engulfing showing up today. If I kind of zoom in, you know, to me, this doesn't look like it doesn't look like that, but we'll see. We'll see if that occurs. Now, what would convince me if this was a topping pattern? Well, obviously follow through would, but I would be convinced that maybe gold could have a problem if people were running into bonds, like we were going to get a recession. But I don't see people running into the bond market. I see it going up. So here's my opinion. I don't think it's a head shoulder topping pattern. I think we're going to head higher. And whether we get a short-term pullback, I think is immaterial for what I do. I also see silver putting in a little falling wedge, breaking to the upside. This was downside pressure, and now it's reversed. So that looks good to go higher, not lower. So we are reversing that. So again, guys, I don't try to predict the market. I don't try to necessarily short-term trade it. I just don't think this is right. And with the people who try to time the short term, your percent success rate is really low. Well, it's not, it's a lot lower, not really low. It's a lot lower. It's like 60% or 50% or something like that. So I wouldn't be too worried about the short-term market calls that people are making. I would just focus on the long term. I think we're going to go higher here. I'm in the direct contrast. This was a downside move, but it's starting to work its way on up. So, but again, anybody can be wrong in the short term. Making short-term calls is very difficult. Christine says rig, which is Transocean. The number of conversations occurring for work hasn't been this active for years, which equals a good leading indicator for offshore drilling and production. Those companies have already bottomed. They have already bottomed. And I know a lot of people are saying, well, oil's going to go down. The company's bottomed, guys. They've already bottomed. You've missed the bottom already. The big offshore drilling companies, they're bottomed. They've got inverted shoulder, head shoulders. They are moving higher. Now, a lot of people are saying, well, oil is going to go down. Oil's going to go down. Okay, I don't. You do realize that the charts and the equities, the way that people are positioning, they are not positioning for that. So I feel like I don't know what it is. I do know what it is. People are using narratives, they're using sentiment, they're getting sucked into the sentiment, and I'm using something completely different. I'm reading chart patterns. I'm reading how smart money is positioning. And to get in an argument who doesn't know how to read charts, it's like there's no point in arguing it. So people can write whatever they want on Twitter. They can write and have all these opinions. The only thing that matters is how people are positioning. And if people are positioning for it to go higher, and what this is, it's, you know, do I'll describe it this way. All the smart money is sitting in a circle. We're all staring at each other. The price of the market is going lower. It's going lower, lower, lower. And we're all staring at each other and we're looking at each other like, okay, who's gonna buy first here? When the smart money starts to buy, which is generally bigger money, it creates a bottom. And that bottom, we're all just staring at each other saying, well, who's going to fire off first? Who's going to try to get the lowest price possible with the smart money? Everyone else on Twitter and news, they're all riding short bus style, guys. They have no idea what's going on. And the smart money, you're going to buy when everyone else is negative. When people are talking negative in the news, they're talking negative on Twitter, they're talking negative on YouTube. Everyone's trying to get these views. They need to be over the top, really scary, so they click your little link. And then you are going to watch it. So they're going to do clickbait links. They're going to do all sorts of crap like that. They want your attention because that's what they're monetizing. They're monetizing your attention. That's not how you make money. You make money by buying when everyone else is talking negative about a subject. When the herd is like, oh, well, that's too scary to buy. That's when you pull the trigger. That's when smart money is accumulating. It's a very hard game because everything that people have learned all throughout their life is about fitting in with society. It's about being a part of the herd. And now when you're outside of the herd and you're thinking completely different than everyone else, it feels like you're a little bit more vulnerable. You need to buy in the face of mixed emotions that you are feeling. Well, that looks like crap. Why would I buy that? That's where the smart money is buying. They buy when there's fear in the market. They buy when things are cheap. That's how you make all the money. So April and May of 2025 was the bottom for a lot of these companies. I don't think we're going back there. That's my guess. Now, do I know for sure? I don't know for sure. No one knows for sure. But that is my guess. And the charts look constructive to continue higher, in my opinion. Christine, another one. It says, good slide regarding U.S. shale peak from Kepler. The utilization of drilled uncompleted wells is a key factor that has distorted the capital requirements to maintain these levels despite low rig count. IOW equals it's going to get more expensive and more rigs will be required. So the U.S. shale peak has arrived. The U.S. crude and condensate supply price scenarios, million barrels per day, and you can see at these different 50, 55, 60, we're going to head and roll over in oil supply from shale in America. Now, this isn't really oil supply. That's really oil and natural gas liquids. They keep putting stuff in it to hide the peak. I think we're screwed. I think this is going to get real nasty over time. And I'm not saying maybe this year or next year, but I think within 5 years, by 2030, we are going to see the world peak in oil supply. And it may have already happened, and we're just hiding it with natural gas liquids and other crap that we're throwing in. Because we already peaked in U.S. shale for oil. It occurred in 2018. And this is all just natural gas liquids and other crap that they're throwing in there. So it's coming. I also think that's why gold is going up. I think the gold market already knows that bonds are screwed and currencies are screwed if this were to occur, which I think it is. So this is the big one to watch. The big one to watch is oil, and in particular, shale oil in America. That's the big one. Sector rotation is the lifeblood of a bull market, says Sam. When will this bull market rotate into the trannies, which is the transportation stocks? We've got short interest. The squeeze is unloading while the price is about to break out of resistance. That's a bull market. That's not a recession. We went through the recession here. This is the recession. This is the breakout. There we go. Now you're looking at things more correctly. Meta is collapsing after reporting earnings. Is the bubble finally bursting? Let's go look at Meta. So here's Meta Platforms. This is basically what I do. There it is. We're coming on up, and you can see that we are getting a pretty strong selling pressure today. You can see this big gap down. It's that big gap right there if you can't see it. Is this the beginning of the bubble? I don't know. You know, the more you don't know and admit to not knowing, the better off you'll be, because you'll focus on other things that you can control. You'll focus on things that matter. And if your strategy works without knowing the future, that's a pretty good strategy. But yeah, Meta looks pretty nasty today, and we'll see if it continues the momentum to the downside or not. Warren Buffett says a tolerance for short-term market swings improves our long-term prospects. If you're not an emotional trader and you're more rational in logic, what they do is they just sit on cash, they wait for people to get fearful. That fear in the market creates an opportunity from a value perspective. So as assets get priced lower, they jump on it. They jump on it when people are scared and selling assets because they have an emotional response to market price movements. You ever notice how they'll say I'm either right or wrong based off of like a day or two market price move? I mean, that is screaming that you don't know how the markets operate. You can't use price as a final all justification if someone's right or wrong on a long-term call. Short-term market swings. So what Warren does and what Charlie and these guys have done is they sit there and they know that difference. They know people are really stupid. I'm just gonna throw it out there. They're very stupid. Most people are emotional traders or investors. What that means is that they like things when the price goes up, they hate things when the price goes down. And then they make decisions based off of price movements. So what happens is when we get a large selling pressure move, people act emotionally and they sell just because price is going down, which is about as stupid as you can be. And what Warren would do and what Charlie would do is if enough people got scared and reacted emotionally to the markets, they would step in and start buying shares if the value of the company was incredibly good. And then it doesn't matter what happens in the very short term. Even if they had to write it down a little bit, they would still buy and get it for a cheap price. So what they're doing is they're preying on the herd's stupidity of emotional reactions to price movements. And then they take advantage of those price movements because they know the value of what they're buying, and they buy it all up. That's what they're doing. That is as simple as I can think of as an explanation of what they're doing. Soybeans, giddy up. Soybean futures are also at resistance here, just starting to peak out. I think corn, wheat, soybeans, they all look good. All of them look fantastic. You know what that's going to be? You know what that's going to do for fertilizers? It's going to do very, very well. And you know what I'm invested in? Fertilizers. Yep. I'm invested in fertilizers. Take advantage of this. I don't care if soybeans goes up or corn goes up or whatever. Usually it's pretty linked to corn. We can pull up corn here. Corn futures, ZC. There it is, trying to break out of that downtrend line. Yeah, I've already got it uh, put up there. And this is the pattern. And what's going to happen is we're going to get another breakout, I think, and we'll go to another level. Just like copper, just like all these others. There's your fractal. If you were to put this back here, I have to squeeze it up a little bit. That's the same fractal there, if you guys can see it. But this is going to break out, and it will create um, another move like that, and then this will turn into another range. And then we'll throw that up there, and then it will be like this. That's what I think is coming. And we're going to take advantage of it by buying here and here, not on corn, but on other things. And then we'll break up into that and create another consolidation up there. And the companies will make a bunch of money in the beginning over here and pay me big fat dividends. It'll be fantastic. Oh, I like investing. I really do. Chipotle is down 16% after warning that the economy is terrible for anyone below the age of 60. So I'll give you my experience. I used to eat at Chipotle probably about once a week, maybe twice, or more, depending on how lazy I was when I used to go to work. So I'd go to work. Sometimes I'd bring my own meal, and sometimes I wouldn't. Usually, when I didn't bring it, Chipotle was one of my top picks. There are some things I don't like about Chipotle. It is very salty. My Lord, it is salty. But I'd go there every once in a while. Now, I don't go to the 9 to 5 job. I don't ever eat at Chipotle ever. So I used to go quite a bit, and now I literally go never. I never go there. I went there once in the past 2 years, and I was like, God, this is salty, and I didn't think they gave me that much. It was a burrito bowl that I grabbed. So I was not happy with how salty it was because I'm not eating a lot of salty foods, and I wasn't happy with the quantity. Plus, the price went up massively. It's like $10 plus for a chicken bowl if you just get chicken. So, am I surprised that Chipotle and maybe a lot of these other fast food restaurants are getting hit? I'm not surprised at all. I hardly ever go out to eat, and Chipotle was one of the areas that I used to eat at, and I don't go out and eat very much anymore. It's too salty, and I think that the quality of food is absolute crap. So since I've been eating at home a lot more, and I like the taste of it, I can't go out and eat anymore because I think it's just all garbage. So, am I surprised that it's way down? I am not. And I don't think it has anything to do with the economy necessarily. I think it has to deal with their pricing. And people are like, it's just not worth it. So, we could be in a good economy. I mean, I'm great. I feel great. I don't feel like I'm suppressed by any means. I'm not limited by how much money I have. I don't eat there, and I used to eat there, but I don't eat there anymore because I think it's garbage. Like I'm just, it's not coming to the realization. Like I can't eat it. It's too salty. So I don't know. That's what I'll say there on that. The fight against inflation is probably not over. This is the gold 2-year percent rate of change, 2 years in advance versus the consumer price index. There's the movements, and here we are, and we've got a big surge coming. Do I agree with this? I do. Why? Because we have bottoming patterns and all sorts of stuff. We're going to get another large surge in consumer price index and inflation. Gold's our leader. So yeah, I think we're going to go higher. And yes, I think fertilizers and lithium and all these other areas, they look primed to move higher. Remember, there's a bunch of stimulus that was done in China too. So China, I mean, they printed a whole bunch of money, and it takes some time to get through the system. And they probably did that about 2 years ago. So let's get this thing going. This is the worst crude glut in history of imaginary crude gluts. EIA glut scam. Crude is down 7 million barrels. Cushing's up a little bit, a little over 1, and gasoline's down 6 million. Whenever you have gasoline down and crude down in that size, that's ridiculous. That is, I mean, that's a 13 million barrel draw there. Well, 12 million if you take out Cushing. It's about a 12 million barrel draw, a little bit less. One of the best indicators of a healthy bull market is when consumer discretionary stocks outperform consumer staples, just like we're seeing. So this is what's weird. We're seeing these ratios, inflation coming up. We're seeing consumer discretionary. We saw transportation up here. Transportation stocks, this doesn't break out in a recession. This breaks out when the economy is strong. So strong economy, and this is also screaming strong economy, and this is screaming we're probably going to get inflation, which is strong economy. Okay, and then Chipotle's dropped 16%, warning that the economy is terrible. All right, so how do we fit this thing together? How do we know what the actual economy is? Well, what are people positioning? We need to use our charts and see what the positioning is in the stuff that we're interested in. You can't use some of this. You can't use Chipotle's opinion necessarily. You got to stick with this. This trumps Chipotle's opinion. This is positioning in the market and how it's moving. Oxy's CEO is concerned about global oil supply amid declines in exploration. When the best discovery made in the past couple of decades, which is Guyana, only produces enough to cover 1/3 of the demand in 1 year. That's a big issue. So that discovery, that large discovery that people always talk, well, what about Guyana? Guyana is 1/3 of the demand of 1 year. That's their entire reserves. Their entire reserves of Guyana is 1/3 of the demand of 1 year. We don't have enough oil, guys. We are trying to ramp this up, and we're not finding hardly any oil replacements in terms of reserves. It is going to get ugly at some point. Here's HFI research. Jesus, U.S. Big Four storage, crude, gasoline, distillate, and jet fuel. Look at that. We're at all-time lows almost. It might be at all-time lows. It's real close to the bottom of 2022. How do we have the price where we're at today? Do you think there's manipulation going on in oil price? I don't know, but it sure looks like it. Is this the big slingshot lower before we head higher? I don't know. This is looking awfully curious here. That's ridiculous, guys. And I don't know how we have the price where we're at. There's like zero. The correlation is completely broken of inventory and oil price. And it's only broken since the elections of 2024. So those elections back then, it's like been broken ever since. Broke. Nickel's about to leave the station. Forgotten coiled explosive. Totally agree, but this is what we talked about last time. So we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Special with that coupon code. We've got a 5 p.m. Mountain Time Sunday Q&A session coming up this weekend. And that's all I've got. So see you later, guys.